The US dollar strengthened after better-than-expected US inflation data overshadowed forecasts for the timing and extent of Fed rate cuts. The data showed that US producer prices rose more than expected in February, in line with the previously reported inflation. Against this backdrop, the US dollar index stabilized near 103.30 after rallying on Thursday. The index is on a track for its best week since January. Next week promises to be busy for the markets, with several important central bank decisions, and the events that traders should not miss are discussed below. You are watching the Traders Calendar. The week will begin with a focus on the Asian markets. Monday morning, we'll see the release of several important reports on industrial production, retail sales, and a press conference from China's National Bureau of Statistics. The offshore yuan was little changed at around 7.2 per dollar as investors reacted to the central bank's latest decision. In March, the People's Bank of China extended more than 387 billion yuan in one-year medium-term loans, but kept the interest rate at 2.5% as expected. Notably, China has set an ambitious economic growth target of around 5% by 2024, although retail sales grew for the 12th consecutive months. The latest figure was the weakest. As for industrial production, December figures accelerated and reflected the strongest growth, helped by strong activity in both mining and manufacturing. New reports are expected to show that retail sales dropped to 5.2% from 7.4%, and industrial production slipped to 5% from 6.8% in January-February. If the data aligns with their forecasts or reflects a deeper downturn, the offshore yuan may weaken. If the reports exceed market expectations, the yuan is likely to strengthen. The Bank of Japan will be the first regulator to announce its decision on Tuesday, March 16th. The Japanese yen dropped below the 148.5 level against the US dollar, pulling back from recent highs as traders anticipate that the Bank of Japan may abandon its negative interest rate policy. The Japanese regulator may wait until April if the results of the wage negotiations are not so strong. With the end of negative rates seen as almost done, market attention is shifting to any clues the central bank might give about the pace of rate hikes thereafter. An end to negative short-term rates would be Japan's first rate hike since 2007. If the Bank of Japan meets market expectations, the yen could strengthen against the US currency. However, much will depend on the central bank's comments. Following, the Bank of Japan and Reserve Bank of Australia will release its interest rate decision. Strong data from the United States forced the Aussie to retreat to a 0.6550, its weekly low. In Australia, data showed that the country's economy grew less than expected in the fourth quarter, confirming bets that the Reserve Bank of Australia could start cutting interest rates this year. Markets are currently pricing in a 70% probability that the Reserve Bank of Australia will start cutting rates in August. From the March meeting, the market is expecting the rate to remain at 4.35% at new signals on the outlook for monetary policy. Previously, the central bank lowered its inflation and economic growth forecast, but emphasized that it would not be in a rush to cut rates. The relatively hawkish tone of the central bank statement boosted the Australian dollar. If the Reserve Bank of Australia repeats its statement this time and maintains its hawkish tone, the Aussie may strengthen against the greenback. In the US session, investors will pay attention to the fresh inflation report from Canada. Strong US inflation data and the bets on a hawkish tone from the Fed sent the loonie down to 1.35 against the US dollar. Notably, the Bank of Canada kept its key overnight rate at 5% as expected, but dashed the hopes of borrowers looking for relief by saying that core inflation means it's too early to consider a cut. If a core stays where it's probably our forecast that total CPI comes down isn't going to materialize. So that's why we are putting a lot of focus on those core measures, Governor Tiff McClellan said. Canada's headline inflation rate stands at 2.9%, still well above the bank's 2% target. Tuesday's data is expected to bring the rate down to 2.7%. If the data is stronger and the price pressures do not ease, the loonie could gain support, while a stronger slowdown in inflation would weaken the currency. On Wednesday, the market's attention will be on the UK's latest inflation report, which will be released ahead of the Bank of England's meeting later in the week. The pound is headed for its biggest weekly loss against the US dollar since December, and the British public's expectations for the inflation rate in 2024 have fallen over the past 3 months. A Bank of England survey showed on Friday, which may reassure policymakers considering when to cut interest rates. The Bank of England is expected to hold interest rates at 5.25% on a Thursday. However, that's the picture of market expectations on the agenda right now. The forecast reflects a drop in the UK inflation to 3.6% from 4%. A stronger reading on a CPI growth would play in favor of pound bulls and dampen expectations for an early rate cut. If the data is in line with the forecast, the British currency may lose weight. On Wednesday, the main event will be the Fed meeting and the FOMC statement. Trader sentiment has turned to cautions after a larger than expected rise in producer prices added to the hot consumer inflation data early in the week. Traders reduced the probability that the US Federal Reserve will cut rates in June to 60% from around 67% late Wednesday night. The market is forecasting fewer than 3 US rate cuts in 2024, down from 3 to 4 about 2 weeks ago and about 7 late last year. US borrowing costs are currently in the 5.25% to 5.5% range, the highest in more than 2 decades. The meeting minutes will reveal that happens next, not least because of the updated quarterly dot plots of policymakers' forecasts and the likely start of discussions on slowing the Fed's balance sheet reduction. Considerable attention will be paid to what this Fed dot plots suggest about an assumed neutral interest rate that neither stimulates nor constrains the economy over the longer term. If the Fed notes the slow pace of decelerating price pressures and dashes the market's hope of an imminent easing, the US dollar index could strengthen above 104 points. On the contrary, a dovish tone could force the US dollar index move down to 102. This was a brief overview of the most important economic events from my InstaForex analysts. Follow us and make hefty profits from your trades. See you online soon.